Welcome to Candlelight. I'm Montana. Candlelight is pretty much everything trading and investing. I've got a heavier emphasis on technical analysis, but I go over fundamental analysis as well. Now, this channel, I'm going to put out every episode in kind of a compound learning system, so to speak, where wherever you learn from the previous lesson, it helps to understand the next one. Now, this episode is all about learning how to read candlesticks. If you want to learn how to read price action, whether for an advanced or for a beginner, you need to learn how to read or understand what a candlestick is. Now, a chart is a chart is a chart, right? You can be looking at an options chart, a futures chart, stocks, currencies, whatever. It doesn't matter. Candlesticks are the end all and be all of a price movement, a price action, because price action is a mechanical function. So if you want to learn how to be able to read price and improve your trading and investing, you need to know how to read a candlestick. There we go. So let's get started. Let's go over what candlesticks are and how to understand them. All right. So here you have a green candlestick. That's bullish. Bullish means price going up. Bearish means price going down. And neutral is obviously neutral. So a bullish candlestick is almost always green. You can change the colors to whatever you want, but universally green is go, red is stop, or green is good and red is bad. On a bullish candlestick, you'll have the open, which means price opens at this price, and I don't have prices here. This is just a theoretical, or this is the whiteboard where we're going to just learn the basics. Price opens at this price and then closes above the open. If price opens at a certain point and closes above, then price is rallying. That's bullish. There's greed in the market, and there you have a bullish sentiment. The high of the candle is obviously the high, and the low of the candle is obviously the lowest point. These are called wicks or shadows, and we'll go over that in just a second. A bearish candle is pretty much the inverse of a bullish candle. The only difference between a bullish candle and a bearish candle is price opens at a certain price point and then falls to close below the open. So if at 6 o'clock price opens or price trades at this point, and let's just say you're looking at a 5-minute chart where every candle represents 5 minutes, and if price falls and closes below the opening price at the end of those 5 minutes, then you have a bearish candle. Fear is coming into the market, or people are just selling. And the high and the low is exactly the same. The highest point is the highest point, and the lowest point is the lowest point. Makes sense. And thirdly, you have a neutral candle. A neutral candle is exactly what it means. It's neutral. It just goes sideways. There's no body, there's no direction to that candle. The opening price is the same as a closing price, which means, let's just say, like, it rallied and then it fell and then it came back to close at exactly the same price point that it opened. And the high and the low are exactly the same. Those are the three types of candles. So now let's go over just a very basic understanding of how they're formed with a little bit of animation or movement. We're not going to go over wicks just yet. Let's just keep it really simple. So let's go over a bullish candle. Price opens and then rallies and closes. Now in the market, you don't get that smooth movement. It's a bit more jittery, but that's exactly how a green candle forms. It opens at this point and then closes above. A bearish candle opens at this point, falls, and closes below the open. Pretty simple. Now the neutral candle opens at a certain point, let's just say it rallies, and then comes back down, falls, and then rallies and closes at the same point that it opened. That's a neutral candle. Again, no direction, it's just going essentially sideways. If you have like 5 of these, then price will just go off to the right. Simple. Now let's go over how kind of wicks are formed. So in a bullish candle, Price opens at this point and then is currently below the open. Now it has not closed yet, but if price is below its starting point, then it's going to be red. Hence, like all bearish candles, if the current price or the closing price is below the open, then it's red. It rallies, leaving the wick. The wicks tell you where a price was, either below the open or above the close. And you're about to see this. And then rallies all the way up here, falls, and then let's just say it closes there. That's how you get wicks. Wicks tell you where price was below the open, right here. It was currently falling, then price rallied all the way up to this point, and then fell, and then the end of whatever time period that candle is. And we'll go over time frames in future episodes. And then close at exactly that point, you got a green candle. Now let's go over a bearish candle. Price opens here and is currently above the opening price. It has not closed yet, but it's currently above the opening price, so it's green. Then price falls all the way down here, and then rallies a bit, and then closes. You have the wick on top and the wick at the bottom that tell you where price was either above or below the open or the close. Now you can have candles that close all the way 100% of the range, like the ones we were showing previous to this. And then you have a neutral candle, which we've already been over. Rallies, it falls, and then closes, leaving you no body at all. These two have bodies. This neutral candle doesn't, because it opened and closed at the exact same price point. So that's how you get wicks. Now, the candle of the body, yes, it's important. It tells you where price closed relative to its range, but the color isn't necessarily the most important thing, right? Not all green candles mean upside, and not all red candles mean downside or bullish or bearish. It has a lot more to do with the range of the whole candle. Let's go over that. So the range of a candle is the distance between the highest point and the lowest point, so the high and the low. That's the range of the candle. If price closes anywhere within the upper 70, 80, 90, obviously 100% of the candle, that's a bullish candle. If price closes anywhere in the lower 30%, right, of the whole range of the candle, then it's pretty bearish. And if it closes somewhere in the middle, it's neutral. That's the most important thing. Where the close of the candle is relative to its range, the range is the high and the low, that's what tells you whether a candle is more bullish or bearish, or neutral for that matter. So I'm going to give you a short clip on some live action candles that are obviously fast forwarded, because it's I don't want to have you sitting down here for 10 minutes just looking at a candlestick, or not a candlestick, creating a lot of candles. That can be pretty boring. But I'm going to give you a fast forwarded clip on what candles look like during live action. You'll be able to see the creation of the wicks and how price is a bit more jittery. It's not smooth like you just saw here, because this is obviously a perfect world, kind of just smooth movement up or down. And then after that, we'll go to live application. So this is what real price action looks like. This is a downtrend, so there's an overwhelming amount of red candles to green ones. And as you can see, price doesn't move smoothly to the up or downside. It kind of jumps or jitters its way either up or down. The wicks you're seeing either above or below the open or close tell you where price was. And once price closes on these 30-second candles, having said that, I am fast forwarding this clip. It'll move over or move on to the next candlestick. And this is what an uptrend looks like. It's pretty much the inverse of a downtrend. There are more green candles than red ones. Impulse moves or larger moves are to the upside instead of to the downside. And wicks are being created the exact same way as they were on red candles. All right, so now you saw what live candlesticks look like, and how, a series of green ones give you an uptrend and a series of red ones give you a downtrend. we can now see what they mean in terms of range on actual charts. Now, I want to drive home the point on relative to the range of the candle. That's the most important thing. So on the PowerPoint, we saw something pretty basic that was just, it closed at 100% or something like that, where it's obvious it's a bullish candle, like this one. It opened at this price point, right where my cursor is, and then it closed, or it opened here, it fell just a little bit. That's where you have the wick right there, and then rallied and closed at 100% of its range, of its high and low. That's a very bullish candle. That's awesome. Now here's what I mean by you don't need the color of the candle, the color of the body to tell you, or the color of the body is not definitive on whether a candle is bullish or bearish because of this. This is called a hammer, and it often occurs in demand zones. And we'll go over demand zones and what they are and why they work so well. In fact, that's what moves price action, or that's what moves price. Price action is also price movement. It's the exact same thing. This hammer has a red body. That does not mean it's a bullish candle. In fact, relative to the high and the low of the range of that candle, it closed in the upper, 80%. That's really bullish. Hence is why this is the turning point to the upside. That's a very bullish candle. Red body, but closed in the upper 80%. That is bullish sentiment. That's greed coming into the market. Last example. This is a relatively large wick. You don't often see that many of these, but it was a perfect example of what I mean. This is a very bullish candle. This is not only a huge range, but it closed in the upper, 90, 95, 98% of its range. That's very bullish. It can have a red body, but that thing is telling you there's demand in the market. So let's go over what a bearish candle looks like with some examples. And I know I'm giving you more than just one, but I really want to drive home the concept, because anything that comes to technical analysis or understanding technical analysis and price action and trading and investing, there's a lot you need to know. So it can be, some people can find this pretty intimidating and a little complicated, but it's really not. And with enough examples, you'll get there. So this candle right here, green body, but it closed within the bottom 30% of its range. That's pretty bearish, hence why it's part of this downtrend right here. Right, that's a pretty bearish candle. Green body, but means it's coming down to or where it closed, it means that there's bearish sentiment in during that time period. This one, relative to its range, this big red one, closed in the bottom 20% at least. That's a very bearish candle, hence why it's part of this downtrend right here. So let me just make this pretty. I know I'm kind of anal like that. All right, so that's a pretty bearish candle. That's pretty obvious, and it has a red body, so that also helps a bit. This is another example of kind of what this one was like. Closed bottom 30%. It's a bearish candle. Now, don't focus on where it is in this mini uptrend right here. We're going to go over trends and all that, but let's just get the understanding of what candlesticks mean. So the meaning of the candlesticks and where it closes relative to its range. Bottom 30%. That's a pretty bearish candle. Excuse me. And then you have almost a picture perfect a bearish candle where it closed at 100% of its range. Also part of this downtrend right here, or this move to the downside. That's a pretty bearish candle, and it has a red body, so that helps. So relative to the range, guys, that's what matters. The high and the low, or within the high and the low, where did price close? That's the key. And now let's go over neutral candles. So this red candle right here, it has a red body. But notice between the high and the low, the range, it closed pretty much dead on 50%. That's a neutral candle, hence why it was part of this drop, base, and then excluding this wick here, another drop. This is where it went sideways, where a lot of these three candles, this one, not so much this one, but these two, relative to this candle's high and low, it closed 50%. Relative to this candle's high and low, it closed 50%. Those are very neutral candles, hence why price went a little sideways. That's a neutral candle. Red body, but it closed in the middle. This is also another drop. You get a small basing and then another drop. Remember, if it's neutral, it has no direction, it just goes sideways, hence why it's basing. It just bases. And these are formations that we're going to go over. Drop base drops, rally base rallies. We're going to go over all that. And they're really important. Those are the areas that cause other moves. Hence why in this area here, price moved to the downside again. But again, we'll cover all that. Between the high, which is also the open, the high can also be the open, and the close can be the lows, and the close can be the low. Same thing to the upside. Let's just say this green candle, the open and the close are also the lowest point and the highest point. It doesn't necessarily, a candle doesn't necessarily have to have a wick for it to be the high or the low. It's just the highest point and the lowest point. So between the high and the low, it closed dead on 50%. It has a red body, but that's a neutral candle. Now let's go over like a poster representation of what a neutral or a doji is called. A neutral candle, like a perfect one like this, like these two, those are called dojis. And all candlesticks well, the origin comes from Japan, actually. The guy who invented candlesticks he was born in 16 or 1700s in Japan. He was a rice trader. His guy, the name is Munehisa Homa, and he wanted to learn how to put it or understand people's emotions reflected in price. So obviously, if you have full greed here, like a big bullish candle, that means he can see people's emotions. There's greed in the market. People want to buy. And he's the guy that invented candlesticks, and he just decided to put in four points of information: the open, the close, the high, and the low. And it gave him charts. And imagine that, like before charts or like before Munehisa Homa came around, there was no way to see price action at all. So with 4 bits of information, he was able to see not only price movement, finally there's a chart to see, but he could see people's emotions reflected in price. Absolute stroke of brilliance. So a lot of these names, or all these names actually, are Japanese. I don't know what doji means. I think a lot of people know what doji means. But you'll see like dark cloud cover, harami. Harami means pregnant woman or something like that. And we'll go over what a couple of those look like in I believe the upcoming episode. This is called a doji. This is a perfect neutral candle where it has no body. This is just poster representation of neutrality. Hence why price is part of this basing right here. It just goes kind of nowhere. Another doji right here. So it closed exactly 50%. That's a neutral candle. Here's another one. Now this one looks like a neutral candle, right? It looks like a doji. It's almost the same. I can get both of them. This one and this one also have no body, right? But notice where it closed. It closed in the upper, like 80% of the range of that candle. That's a bullish candle. It doesn't need to have a lack of a body does not mean it's neutral. It's where it closes within the range of the candle, within the low and the high. This closed, upper 80. That's a bullish candle. Hence why you see it as part of this rally. So that's what candlesticks mean. So I'm going to try and keep my videos relatively short. I know there are some videos out there that are like an hour long and they can be kind of difficult to sit through, but I want to give you just essentially some bite-sized pieces of information on why the market does what it does. Trading is not complicated. It's actually stupidly simple. If I can do it, believe me, you can. But it's also not easy. And the reason why is there's a lot of pieces that you need to know. It's understanding what price action is and reading price movement, understanding technical analysis and all that. It's it's all about a whole bunch of pieces of information that is, it's a science-based art. So you do need to know a lot of facets of it, but none of them are complicated or difficult. So let's start with the first one, like we just did, which is understanding what candlesticks are and what they represent, and slowly we'll build upon what we've learned. The next episode is, I believe, going to be um, candlestick patterns, and we'll cover that in future episodes. And we're going to cover supply and demand zones and trend lines and all this stuff. And the more you know, the more everything will start to become more and more clear. So I look forward to seeing you guys in the next episode. Take it easy.